you're quite a unique firm, as I mentioned, not just as the world's largest active manager, but all of your analysts have skin in the game. They all run money. So by definition, you are a long-term investor. What's the strategy behind that?
Well, I'll give it two ways. Analysts analyze, investors invest. And it sounds super simple, but the capital system where all the analysts are actually investors in their companies, it's fundamentally different. If you were to tell me, I think you should do something, I would say that's interesting. If you're telling me you are doing something, and here's why you should follow me, that's a very different thing. So I think skin in the game, when you invest in the companies you analyze, you understand the company deeply. You understand liquidity, portfolio construction, upside, downside capture. You think like a portfolio manager, you're not a stock rater. Buy, sell, hold. Buy, sell, hold, it's interesting. It's not an active verb like investing in that way. I mean, I think when I think of investing, I think, are you passionate around the companies you own? Sometimes an analyst would come in at my previous company and say, remember when I told you to do X? And I'm thinking, I sometimes forget the name of my own kids. Like, do I remember what you told me to do back when? If I look inside your portfolio and that's your highest conviction and I see it as your biggest holding, that's showing me something as opposed to telling me something.
Interesting. Can you build an all-weather portfolio these days, and how challenging is that?
Yeah, we had our town hall from Singapore. Capital Group has 9,500 associates around the world. 40 leaders have come to Singapore this week, and we have our town hall and our board meeting here. And at the town hall yesterday, I get asked the question about the same question effectively. And I reminded people of the story of the Investment Company of America. Capital Group started managing the Investment Company of America January 1st, 1934. And we produce a chart called the Mountain Chart, and it shows how the assets and performance have done over a period of time, and it shows all the things happening around the world during that near century. The Great Depression, the Cold War, the Cuban Missile Crisis, the energy shock of the 70s, dot-com bubble bursting, the Great Financial Crisis, COVID. Any time you could have had a very good reason to be nervous. And that strategy is compounded over 11% annualized for 92 years. It's beaten the S&P 500 by over 100 basis points annualized. And at any point, you could have tried to get off that train by market timing. And so building a portfolio that owns great companies and not trying to time the market pays huge dividends. It's hard to do in the moment. And every moment, we think this time is different. And usually, it's just another spot as you're heading up that mountain.
What about diversification by region? As you said, you've had your boots on the ground, so to speak, in this region for at least a week or so, traveling around, meeting and observing. I want to read you something that the New York Times wrote a day or so ago about what's taking place in Asia today and the opportunity or risk that it now presents as a result of the war. When they said, quote, even if there is a peace deal soon, the future of this industrious region that has driven global economic growth for decades will likely include months of canceled flights, surging food prices, factory pauses, delayed shipments, and empty shelves. Shortages that could push several countries into convulsions of unrest, followed by recession. How would you react to that?
I think of that as technically true in the short term and quite short-sighted in terms of the long term. This region's going to be just fine. Asia is a growth engine for the world. If you look at GDP growth, if you look at population growth, we own about $300 billion of publicly traded securities in Asia. The markets have done exceptionally well over time. I am not worried about Asia over the long term. Japan just emerged from 30 years of deflation. Corporate governance has never been stronger. Same in Korea, where they're really focused on price to book value and return on invested capital. people should not be worried about the long-term prospects of Asia. And in our business, the growth of professionally managed assets in wealth management is twice that for Asia, twice that of Europe and the US. So Asia has a lot going for it. Greater energy independence and stockpiling probably will be something that comes out of this period of time, but I'm not worried about long-term growth in Asia.
I'd love to get your thoughts on Singapore specifically, because over dinner last evening, I thought there was an interesting point that was made, the way that some companies can't invest in the United States by virtue of political blowback. Some countries can't invest in China. Some companies can't by virtue of blowback. And Singapore has become, in essence, the third place because it offers a degree of neutrality that is attractive in what is an increasingly more polarized world. Do you agree with that?
Singapore is a 60-year incredible success story. I actually lived here. Scott and I were talking before we came up. I lived in Singapore in 1996 and 1997. It was a success story then. 30 years later, it's only gotten better. So is it a place of stability, a financial hub for Asia, a place for growth, population growth, GDP growth? Companies can thrive, entrepreneurship, fintech. Everything you said about Singapore is true and more.